who want to get ripped off, or donkeys. And by the way, that is not fair to donkeys because they're great animals. I love donkeys. So in other words, guys, good investors and traders always do the opposite of everybody else. They do the opposite of the herd. So in a nutshell, we buy when everyone is afraid and we sell or take profit when everyone is excited with greed. So going back to this chart of Bitcoin, those folks who are buying Bitcoin mistakenly at these extremely high levels when the sentiment was an extreme point, their risk would have been this much. Let me show you. The risk they were taking on Bitcoin, let's say someone bought at 19 or 18,000, this is how much they were risking until now, if they've been holding until now. Whereas if you waited for the price to drop back to the levels I mentioned, which was at the 100 EMA, close to just under 10,000 levels, okay? That means your risk would actually have been this much, as shown to you by this green square. So when you compare these two risk boxes, which one carries the greater risk? Obviously, the person who mistakenly was buying at these extreme levels, in other words, following their emotions. And by the way, I spoke to a Bitcoin millionaire just recently, and he was saying to me that as Bitcoin was hitting just under 20,000, what do you think he was doing? He was actually taking profits. Now, he had made about $7 million at this point, and he was taking $1 million off the table here. So he was selling, not buying, into that emotional state. Okay, now let's take a look at the chart of Bitcoin, and let's see where we are right now. Now, you will see two key levels on my chart. In fact, let me just zoom back a little bit so you can see this much more clearly. So sure, first of all, as I mentioned before, this has been so far what appears to be an ABC Elliott wave correction. And this appears to be the C wave of that move. But putting that aside, also notice something very important, that we're stuck right now between two key levels. First, the 100 daily moving average, the 100 EMA, and the 200 simple moving average, the 200 SMA, or in other words, the 200 daily moving average. And for those of you who may not be aware of what these key levels mean, all that means is these averages, what they do is they average out the price for a certain number of days. So the orange line, what that does is averages the price out for 100 days going to the past, whereas the green line averages out the price for 200 days going to the past. Why are those levels important? Because the institutions, the big players, and of course, the big funds, they all pay attention to these key levels, especially this key level that you see here, and that's the 200 moving average. That key level is often called the dividing line between a bull and a bear market. Take a look, for example, you will see that we have not tested this 200 moving average for a very long time. If I just draw this chart back, just take a look at the price, and you will see that even though we came close to the 200 average here, although we came to the 100 average here and see it bounced off from those levels, but notice we did not come and test the 200 average here, okay? So we have not tested that green line, the 200 daily average, since, let me show you. In fact, we have not tested it since 2015. More precisely, we haven't even touched it since October of 2015. Why is that important? Because markets often come back and test that key level. So what price tends to do is often come down and test that 200 daily average, which by the way is exactly the point when professionals and institutions start buying that market. In fact, let me just show you an example. This is on the stock markets, the S&P 500. Just take a look what happened here. You will see
So that, I'll post a link of that video. He is a fellow Persian like myself. He gives great advice, so please follow his channel. Let me actually show his video really quick. So yeah, it's Rastani Alessio, great advice. Highly recommend you follow his channel. But he's making a great point where basically we haven't hit the 200 moving day average, and we're going to need Bitcoin. It looks like Bitcoin did recover, but if Bitcoin goes under 6,000, then it has finally hit the 200 moving day average. So once again, if you're looking to get into the market, I think that's a great spot. I don't know if it will hit 6,000, but I would feel very comfortable getting into Bitcoin at 6,000. I myself have already started buying in the 7,000 range, 8,000, and even I did make some smaller buys in the $9,000 and $10,000 range. But like I said, we haven't hit that 200 day moving average, and that's basically where we might have to go until we actually get out of this bear market. So if you are interested in getting into Bitcoin, or even if you're down right now, I would highly recommend, if you do have some capital, try to put some orders in for under 6,000 or around the 6,000 range, and just hold if you can, because it's very, very likely once we hit that low of 6,000 that a bunch of money will come back into the market, and it'll pump the price back up, and you're not going to see this market cap of 350 billion for much longer. So like I said, it could go down to 300 billion. It might go down a little bit more, but we're almost out of this bear market, and if you want to sell when it's at the lowest point possible, go for it. That might be a sign for you not to do Bitcoin trading, or maybe to move into some other asset classes that are a little more conservative. But like I said, if you are watching this and you are trying to get advice from the pros, I would definitely recommend holding. Do not sell. If you have money that you can afford to invest, I would highly recommend putting in some orders to buy around the 6,000 range, and just wait for the bull market. We're not far away. Let me know what you guys think, but I am buying in this market. I'm definitely not selling, and I will continue to reiterate that. And because I understand the technology and I really do believe in cryptocurrencies, I do feel like this market cap of 350 billion is very temporary, and I do believe by the end of the year 2018 that we will easily hit $1 trillion. So it will go up 3 times what we are at right now. So let me know what you guys think, and keep holding if you're a holder. If you got some capital, put some orders in around the $6,000 range, and we'll see. Only time will tell.